Everybody, this is Jim at sp500chart.com. It's a little bit before 7 o'clock on Super Bowl Sunday, February 2nd, 2020. This is also an interesting date. It's 02/02/2020. The last time that happened was over 900 years ago on 11/11, the year 11/11. So for what it's worth, for those of you who like numbers. Before we take a look at the chart, let me remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, it was a bad week. We were down, and not horribly down, but significantly. And significantly underneath this line of support right here. So I think this is probably going to be resistance going forward, as would this and this, but it goes without saying, if you look at the angles of these lines, if this line is going to be resistance and we're not going to get over it, then we'll for sure not going to get over these. That's fine, because we still have room to go up underneath this. Even if we stay underneath this forever and ever, we still have a lot of room to run underneath this rising support line. So what happened this week? Well, I think we got a couple things going on here, really, in a fundamental sense. We've got the impeachment hearings. We had the Senate trial. We had the coronavirus thing, which is really impacting China's economy, and by extension, that's put some shock waves through the market. That's understandable. The question is, again, how critical is this issue? Is it something that's going to spread and really become a very significant problem? Or is the market just reacting to what if? I can't answer that because nobody knows for sure what this thing is, what to do about it, how far it's spread, and how far it's going to spread. They just don't know. I will say this from a technical sense. We had talked about how it looked like we were in a descending broadening pattern, with this being resistance, this being support. You can see on Monday, we gapped underneath this line, which is a telltale sign of a little panic, you might say. Then we got over it on Tuesday and Wednesday, stayed over it on Thursday, tried to rally on Thursday, but then Friday we really came down probably from where we opened. That was our worst day of the week. And with that in mind, I'm keeping this line on the chart. I'm thinking we probably bounce here. And now it looks like we have another line of resistance. So here's that broadening pattern idea, but now here's also potentially sort of, not a perfectly formed, but sort of a parallel channel between this line of resistance and this line of support. If we keep descending throughout this week, we have a couple of areas to look for support. The first, if we, let me say this, well, I said it right. If we keep falling, then I would look to this line for a good candidate for support, and then of course the neckline right here, which has already been tested once. Could it be tested again? Sure. Because if you look at where we broke out to right here, that really wasn't that big of a breakout. The high that we had on that breakout was 31.56. At that point, that line was at 30.74. So that was about an 80 point breakout. And then we had the pullback. Now we've had a nice run after the pullback. We could come back to this again, but I really think that this red line right here, if again, the conditionally, if we continue to sell off, then this line, I think, is probably our best bet for where we would bounce. Again, it's hard to get a gauge for this because we don't know what this coronavirus is going to end up as. We've had fear in the markets before. Remember, we've had fear in when Greece was gonna default. We had fear with Portugal and Italy. We had fear with, well, of course, more than 10 years ago with all the banks and the U.S. auto manufacturers. We had the big oil spill in the Gulf. We had the earthquake that caused the nuclear reactor incident in Japan. We've had all kinds of things over the past 10 years, and the market has reacted negatively to those. Then it's firmed up and regained its upward trajectory. Because we have two targets, 33.70, which we almost made but not quite, and of course 38.40, these two targets I think are still perfectly valid. And you know, I think they're very doable. But that doesn't mean it's a guarantee, because there's no such thing as a guarantee in the markets. If we look at things on a 5-minute chart, you can see that Friday it sort of looked like we were in a small descending wedge here between this line and this line. If that's the case, you'll see the low of the day on Friday was right on this descending line right here. That might be a sign that we are bouncing at that orange broadening channel support line. If we do get a good bounce there, then we would look to this line up here as as resistance, I think. And if we get over that, then I believe the handwriting is on the wall, and we come back up to over 3,300 to test this line that tomorrow is around 33.18. Again, we're sort of being jerked around a bit by the news cycle. I don't like that because it sort of, when you're looking at these small patterns, it can sort of make the chart look somewhat irrelevant, but I don't think it is in the long run. So that's why we need to watch these lines and these trend lines and support lines that have a richer history behind them other than just the last few weeks. So let's see how we start out tomorrow. I checked the futures. Futures are basically flat. That's probably a good thing. So, you know, all I can say is let's just keep watching it. The one thing that happened this week is we really broke down significantly through all of our rising support lines that we had discussed in our immediate future. Of course, we got some underneath us, and obviously we haven't broken through those. So let's just keep an eye on it together and be patient, but also be watchful. And, you know, just sort of let this thing unfold. I believe whenever the markets feel like they have fully digested the coronavirus issue, I think we're going to take off. So, you know, maybe watch the news too. I hate to say that because as someone who reads charts, we usually say ignore the news. But in this particular case, yeah, don't ignore it. For your own health and safety, don't ignore it. But it could also have some bearing on the chart. So, hey, there's your weekly review. Thanks for taking time out of your day to watch it. And as always, thank you for your very kind support.